What if the wealthiest people in the world don't just earn money, but quietly build systems that protect their power for generations? What if the rules we live by, the financial laws we follow, and even the crises we suffer through are not accidents, but outcomes of structures designed to benefit a very small group? Today, we peel back the layers of a world most people never see, a world where influence is currency and protection is engineered. Because the biggest mystery of all is simple. How do the elite stay wealthy when the rest of the world struggles just to keep up? Welcome to Dollaroid, the place where hidden financial truths finally come to light. To understand how this system works, we have to go back to the origins of wealth itself. In the ancient world, power came from land, armies, and royal bloodlines. Kings, emperors, and empires controlled resources, and wealth simply followed. But as trade networks expanded and global commerce grew, a new type of elite emerged, not warriors, but bankers, merchants, and financiers, people who learned that controlling money offered more power than controlling armies. One of the earliest examples was the Medici family of Florence. They weren't rulers at first. They were bankers who financed rulers. And slowly, something shifted. They discovered a truth that still shapes modern power. When you lend money to governments, you gain influence over them. When you finance wars, you shape the outcomes. And when you control the flow of capital, you don't need to sit on a throne. You can control the throne from behind. This idea grew over centuries. As nations industrialized, elites found new ways to protect their power. Corporations emerged. Stock markets were born. International banking networks expanded. But in every stage, the core strategy was the same. Build financial systems that reward those at the top and shelter their wealth from instability. The rise of central banking marked another turning point. These institutions were designed to stabilize national currencies, but they also created a new layer of control. The Federal Reserve, the Bank of England, the European Central Bank, these weren't ordinary banks. They had the power to print money, set interest rates, and influence the entire economic direction of their countries. And behind every major central bank, powerful families, political dynasties, and financial groups gained influence silently. The origins of elite protection were built slowly, but the rise was swift. By the early 20th century, certain families and groups understood that real power came from creating systems that worked in their favor, even in times of crisis. When ordinary people lost jobs, they bought companies at a discount. When the stock market fell, they acquired assets. When inflation rose, their wealth of phone held in hard assets grew stronger. The system didn't just protect them, it elevated them. But every structure, no matter how powerful, faces a breaking point. The Great Depression of 1929 exposed the fragility of the financial world. Millions lost savings overnight. Businesses collapsed. Economies froze. But the elite? Many emerged richer. They had liquidity when others had desperation. They had access to private deals when markets were closed. They influenced new regulations that cemented their control even further. The fallout from this moment didn't weaken the elite, solidified their strategy. After World War II, the Bretton Woods Agreement reshaped global economic power. The US dollar became the backbone of world trade. Countries pegged their currencies to it. But beneath the surface, a new class of global elite emerged, individuals and institutions who understood that controlling global finance meant controlling global power. International institutions formed, the IMF, the World Bank, the BIS. These were not just economic bodies. They were guardians of a system designed to maintain stability, but also to preserve influence. Yet even this system cracked eventually. The 1971 collapse of the gold standard unshackled the world from real value. Money became fully fiat, created at will, backed only by trust. And this moment allowed the elite to expand their wealth protection strategies even further. Now they could leverage debt on unprecedented scales, manipulate interest rates, influence markets, and diversify globally in ways the average person never could. But this rise led to another breaking point, the 2008 financial crisis. The housing market collapsed, banks failed, millions lost homes, savings, and stability. But again, the elite were protected. Governments bailed out institutions too big to fail. Central banks injected trillions into the economy. And while middle-class families struggled for a decade, the wealth of the elite surged to historic highs. The fallout revealed a truth many still struggle to accept. Crisis is not the great equalizer. Crisis is the great divider. Attempts to reform this system, regulations, transparency laws, banking oversight have all failed in one crucial way. They don't touch the structures that truly protect elite wealth. Offshores, trusts, private equity networks, intergenerational planning, tax optimization strategies, influence over financial policy, these mechanisms remain intact. The fixes were designed to calm the public, not to change the architecture of power. And now we reach the modern parallels that are impossible to ignore. Today, the world's billionaires control more wealth than the bottom half of humanity combined. Over 40% of global wealth is concentrated in the hands of the top 1%. More than $10 trillion is stored in offshore accounts, shielded from taxes and scrutiny. When markets crash, the rich buy more. When inflation rises, they shift wealth into assets. When interest rates change, they move capital instantly. The repeating pattern is undeniable. The system bends to protect those who understand it and exploit it. Look at recent events. During the pandemic, millions lost jobs, but the world's richest individuals added trillions to their net worth. While ordinary people struggled with rising rents and food prices, the elite moved wealth into stocks, real estate, digital assets, and commodities that surged in value. This is not coincidence. It is strategy. And the most shocking part? These patterns have repeated for centuries. Crisis, consolidation, expansion, dominance. The cycle doesn't break. It strengthens. From this story, 3 critical takeaways emerge. First, wealth at the highest levels is never passive. It is actively protected through systems built over centuries. Second, crises, while devastating for the masses, often serve as opportunities for the elite to expand influence and acquire real value. Third, the financial world most people interact with is entirely different from the one the elite operate in. One is public, the other is private, insulated, strategic, and engineered. Here is the warning. Understanding this system is no longer optional. As wealth gaps grow wider, as debt levels rise, as currencies weaken, the divide between those who understand the structure and those who live inside it is becoming a defining force of this century. Power is no longer about strength or military force. It is about financial architecture, and most people have never been taught how it works. But awareness changes everything. Knowing the patterns, recognizing the strategies, and understanding the cycles allows you to make smarter decisions, protect your assets, and avoid the traps that keep ordinary people financially vulnerable. You may not be part of the elite, but you can learn the rules they use. This deep dive opened your mind. Subscribe, like, and stay connected. The world of money is far more complex than it looks, and the more you understand it, the more control you reclaim over your life. This is Dollaroid decoding the money systems they never wanted you to understand.